Hello, everyone. Welcome back to the Spartan Journal podcast. We hope everyone had a very restful break, and we're going to get started with our episode 2. So, to start with our 1-month performance snapshot, the S&P 500 was up 2.76% this month. The Dow was up 2.37% this month. The Russell 2000 was up 5.72%, and finally, gold was up 10.59% this month. So, to get into our main topic, we're going to talk about Fed independence. But first and foremost, what is Fed independence?
Yeah, I mean, to start, what a great month. It's great to see stocks moving in the right direction in the new year. But Fed independence, it's kind of in the name. It's just how independent our Federal Reserves are. So how much control maybe outside pressures politically have over, or that's affecting how independent our Federal Reserves are. And kind of just the baseline of that being, is our Federal Reserve making decisions only for our economic growth and not being biased towards kind of outside people or pressures?
Yeah, this is basically when, especially the president is the number one. The president short term is going to want lower interest rates politically so that the voters will vote for them because nobody wants to pay for high interest rates. It's just a proven fact.
Mm-hmm.
But overall, in the long term, it's proven to higher inflation. So overall, Fed independence is looking like the best option as of now, right? We're gonna get into that.
So yeah, but with Fed independence specifically, what you talked about, Andrew, so leading into long-term decisions, right?
Yeah.
I mean, I'm going to vote for you because you're promising lower interest rates. That's great for the first month or two, right?
Yeah.
And then when everyone starts buying stuff, well, okay, it's basic economics. That's the problem. So I think that's where Fed independence, there's a very thin line between what is our president specifically going to do, and how is that not just going to affect now, in the election, that month, right? That even week after, but 6 months down the line, or am I still going to be in the same spot? Am I still going to be happy with where we are economically?
And we've seen this recently with Jerome Powell, how he's specifically one of these Trump's been wanting the lower interest rates, and Jerome has not been really budging. Mm-hmm. So
he hasn't budged for a long time.
Yeah.
He hasn't budged for a long time.
And we also have to think that his term is going to be ending soon. So how will that affect the market? Do we think it's going to make any changes or?
Yeah. Mm-hmm. I mean, I would add that, the pressures are going for sure. The mismanaging, Trump's claiming that there's going to be mismanaging of building renovations by Powell. So that's definitely something to consider.
Yeah. I mean, just simply put, the Federal Reserve is going to raise interest rates to combat inflation, and they're going to lower interest rates to boost growth. And that's something that they want to simply base off of what's best for our country. And we see that in Europe. We see that in Britain. Like the Federal Reserves that are independent, they have a proven good track record. Mm-hmm. So it is very interesting to see how that might affect the market in May, because we're probably going to see a new chairman.
Yeah.
But something to look for as well is Jerome Powell's not going away. He's still going to be on the board of governors for the Federal Reserve. Yeah. So I can't imagine any extreme changes.
Yeah.
But maybe something small.
Well, to your first point, I think it's very interesting that I saw a graph recently comparing the Fed's history from the 1930s to almost the present. And I saw that basically after an interest rate change was made, inflation followed thereafter. So 2008 crisis or any time before that. So it's pretty interesting to see that.
That just proves what the rates can really do to inflation, how powerful they are, and how important this is for the Federal Reserve.
How important Jerome Powell's, who replaces him in May.
He's a big, important dude.
Because with Trump's recommendation, that'll just essentially be Trump pushing on that rate, what he wants to do with rates, but. I think May is a very big month for this specific topic for Fed independence. We might even come back to this. I mean, I know, we're not, school cuts off in April, but, this would be a very good topic to talk about in May when, we have a new Fed chair, we have a new chairman because, Jerome Powell hasn't budged. Powell hasn't listened to Trump for a minute now. So, seeing in May if the new guy does, if the guy steps up, if he's going to go in the same direction or not, that's a big deal, right?
Yeah. It is interesting to look at maybe, how what's going to be happening even in, like you said, this next couple of months, next year, if we're going to see any cuts. There's talks of possible cuts, which would boost growth and growth that we have seen. We see the Dow, gold, silver have all been major rallies even into the new year, which is great to see. So just how these possible cuts might boost that even more.
Mhm.
Yeah.
Bring up-
Yeah, moving forward, the next topic.
Yeah. So Venezuela, right? This is
Yeah.
this kind of happened over our winter break, and I'm assuming your guys' as well. But this was this is like a huge topic that I mean we saw it in the news, and I was like, well, we need to discuss this. We really do need to talk about it because there's so much that's going on, whether it's with business, whether it's with the actual the nation itself. Well, I mean our nation, right? So so let's talk about it.
I mean, to start off, whether you agree with it or not, like this is going to affect our markets.
Yeah.
This is going to affect oil markets, the United States.
This is going to affect everyone's market, not even just ours. This is going to affect everybody's market, man.
Yeah. So we've seen the U.S. making moves that kind of taking control over Venezuela for a while now. They seized one of their ships a while back, and so now we're in control of all their oil. So this is something definitely keep an eye on. We're overturning, I think, $2 to $3 billion dollars worth of oil back to the United States. Look at maybe what we're going to do with that, how that might affect crude oil prices, and then kind of specific oil company stock prices.
Yeah. Just to give you guys a little bit of background, the amount of oil that was being produced was drastically lower than under Maduro. In the 1990s, I believe it was around 3.5 million barrels a day that were being produced in Venezuela, and then that got reduced down to around 1 million. I think it was around 1 million barrels a day, and that just goes to show you that the infrastructure, after a while and all the aging, it needs a lot of reconstruction. So with this comes lots of money that these big oil companies need to think about, because it could be hundreds of $50 billion, and this is going to take years. They estimated it over like 10 to 12 years, around like 2040 area. So yeah, just bringing this into play, I mean,
there's definitely a lot of varying factors.
No, that's definitely a long time, and a lot of investment that needs to be made into this.
Investments. I mean, just even talking about that, going away from oil in Venezuela specifically, there was something. I didn't do a ton of research on it, but I saw specifically in Venezuela a lot of U.S. Obviously PEVC, that's a huge topic right now in America. A lot of even RIAs, registered investment advisors, they're getting bought out by PEVC firms that even the WMA knows. But even just in Venezuela as a whole, that is a huge. It's almost like they're calling it like a gold rush kind of thing, where all these companies need to get bought out if they want to stay alive. If they want to, even small shops, even small little boutique shops, they're even getting bought up by PEVC. They're almost treating it as a gold mine, right? Because there's so much that they need to take that
I think a lot of times what people forget is like the debt market is so much bigger than the equity market. Or all across the world, honestly. And I think like hedge funds and some of these companies that invest into like secondary investments, they're definitely going to find a market there, because there's so much debt out there in Venezuela, especially. I think that hedge funds are going to start moving.
It's interesting to see how those bonds are going to play out in a couple of years too, because like whether they're short term, whether it's just I need the liquidity kind of thing, or if it's long term bonds, what's going to happen in like 5-10 years now that all that debt is secured, right? Like if even that that debt I'm assuming is secured, but if it's not, then what's the backside of that?
Like recently, the prices of oil since the incident, they've stayed within the same amongst a few dollars, but I mean that could change
for a while
within time.
I mean, the reserves I saw an article where their reserves are decreasing very rapidly. They have a lot still, but like I think in the long term we're going to see definitely a shift in oil prices. Maybe not in the short term, it's not going to reflect. But
agreed. Something we almost forgot to mention: Venezuela has the most oil reserves out of any country. So something to look at. Over the weekend of the U.S. kind of taking control over Venezuela, there was a lot of hype around these U.S.-based oil companies like ConocoPhillips, ExxonMobil, and Chevron. So there's a lot of hype. I think that Monday, January 5th, Chevron jumped a little bit over 5%. ExxonMobil and ConocoPhillips also jumping a couple percentages. And then after, like Andrew said, we saw how much this was going to cost, how long it was going to take. They kind of readjusted down a little bit, and then we've seen a slow kind of increase from there. So they have seen an increase since that big move the weekend of January 2nd to 4th, and it's interesting to see how it's going to play out.
I think an important point to mention also is a lot of the oil that's in Venezuela is very heavy oil. That's a lot of what the U.S. uses. So the implication there is like there's a lot of investment that needs to be made to refine the oil and then to actually put it into commercial use. So
Yeah.
I think the companies are going to face some unique challenges with their cash flow. So going into their internal, I think their cash flows, there definitely are going to be challenges there that we need to see.
Yeah.
And we're gonna really see if these companies are willing to spend this amount of money
Oh,
for
right.
like
Yeah.
these
Right.
changes in infrastructure. Like
Mhm.
they need to have.
That's where that
they need
debt
to-
market comes into place,
Yeah.
right?
getting the
That-
valuable
that
backing so that their stock doesn't just in the end they always want higher returns. So if their the stockholders are kind of suspecting something to happen in the future that's going to really deplete their stock, like that could also lower the stock there's many different factors.
Yeah, there's a lot of stuff that goes into it. But
Yeah, there's a lot of potential for long-term gain for these oil companies. Just will they take advantage of it, and is it worth it? Is a big thing for
Yeah.
investors to look at in the near future.
yeah, well, that will wrap up our first episode. Thank you everybody for coming out, and thank you guys for listening. Once again, this was our episode 2.
First episode of the year.
First episode of the year, first episode of 2026. So hopefully you guys enjoyed. We'll be back in the next couple of weeks. But yeah, stay tuned. So thank you guys.
Thank you.